Good evening, everyone. Hope you all are doing well. Let's take a look and see how Bitcoin closed for the day and what to expect possibly for tomorrow. So, taking a look at the daily candle close, we had a pretty decent bearish candle for today. Obviously, this is zoomed in. It's not that huge, but you can see that we basically closed at negative 1.42%, about $918 down for the day from its open. So what you gotta expect, guys, is obviously Sunday closed as a bearish doji. You got the expansion on Monday. I'm expecting for the bottom to basically be in soon. I don't know if it's gonna be basically this would be the bottom around 63,791, or if we're gonna take out that bottom and test the top of this order block. Either way, Tuesday is going to be interesting. So Tuesday, we could potentially, as it stands right now, we could potentially get these tweezer bottoms here on the daily and get that move to the upside. I did pull a 786 retracement. We hit it perfectly. I mean, that could really explode price to the upside. So the question right now is whether or not we dove into enough liquidity to the downside. And I think for right now, I would have to say that we might have, just because we took out this wick right here. We'll see how that looks on some of the smaller time frames, getting into like your 4 hour and your 2 hour. But at least for right now, that's what it looks like, right? Um, all right, so taking a look at your 12-hour time frame, still getting that tweezer bottom in. Like I said, you took out this wick right here. So anybody that was going long had their stops below here, got stopped out. And then basically the question is whether or not that's enough liquidity. You want to see the 12-hour, this next 12-hour candle close above the 21 MA. So hopefully that will be a decent sign. So we'll wait to see if we get that. Taking a look at your 8 hour. So on the 8 hour, and even more so, guys, look at this. I mean, that was a kind of a double bottom that you wiped out. So that could have definitely been enough liquidity right there to the downside that we wiped out. 4 hour, again, you want to see us get back above that 200 MA. Not fully bearish just yet, just because of how far the 21 is from the 200. So, if this were really a solid downtrend type of move, you would want to see these moving averages a lot closer, right? And obviously, the 21 is a lot farther away than any of these other moving averages. So, it is telling me that there's a potential that we do get a recovery sooner rather than later here. Um, so as far as 2 hour, you also want to see obviously us getting back above the 200 MA again. As far as price target goes, honestly, guys, I would probably be aiming for a bearish 786 level. So maybe right around this green line, around 64,915 could be a possible take profit one. If you were to kind of take multiple profits, right? Some people they do like three take profits. I would say this would be the first target is 64,918 for right now. Um, just basically based off of the bearish 786 retracement. Now, ideally, what I would like to see happen if we can get that violent move to the upside this week is taking out this double top around at least 65,340, maybe getting back into the 66K-ish range to test up higher. That will happen, sooner probably rather than later, especially how we've dropped for this week. So I would not be surprised if we did something like that, where we actually, maybe if we do have the bottom in, we just start expanding upwards and we may, like I said, get into the high 65 range, 66K range again. Um, because we, are below weekly open and it's still the beginning of the week, you have your Monday midnight line that I put here at 64,962. You have your weekly open at 64,870. I would, assume that at least the 64,962 would be tested. That's also your bearish 76 level. If we are going to be bearish, watch for this to come up, tap this level, and then fall back down in a bearish fashion. I don't think we're going to be bearish for this week, like I said, just based upon the fact that we did dump for Monday. But again, guys, you got to keep in mind that anything can happen in these markets. Let's see, taking a look at the 1 hour, so you did get the death cross, you did get below the 2 hour, 200 MA. You're kind of touching it, using it as resistance right now. I would look for a price to slowly get back above it at this point. You obviously don't want to get these moving averages tight. But I'm not bearish right now, if I'm going to be honest with you guys, especially from a timeline perspective. I'm going to be looking for longs this week. Um, your 30 minutes. So your 30 minute, you're getting this nice mini, kind of a mini accumulation range here. within 64,200 and 63,800. So you kind of are staying within this range, chopping around, building up enough liquidity. Hopefully that's driving enough people to short this market right now, and basically we can take them out to the upside. That's usually what happens in these accumulation zones here. Taking a look at the 15-minute, you regain the 21, you regain the 50. So we just have to get these moving averages tight. Give it through the night. It might be a very, very low volume and slow week for right now. We will take a look real quick at the Fed events as well to see if there's anything that is outstanding. But other than that, guys, like I said, as far as targets go, basically for this week in general, I'd be looking for a high. If we can get back above Monday midnight open, I would be looking for a high up into the 65.3-ish range at the very minimum. Okay, so taking out this double top up here would be kind of what I would be eyeing. That being said, guys, let's go ahead and take a real quick look at liquidity. So taking a look at liquidity, let's go into the 4-hour time frame. Let's see what we got going on. So basically what you can see here is you have I believe this is a nice 786 retracement here. Kind of looks like one to me. Almost exact. Let's see. Yeah, you kind of would have to cherry pick it, putting it right here on this wick, but you kind of, basically kind of front ran it if you chose that one. You almost nicked it, but, essentially, guys, this could be a very, very huge move up. I'm going to tell you that right now. If this 786 holds right here on the 4-hour, this could really expand up at least to 66,600, if not 67.5. So this could be a very expansive and violent move up for the time being. I would be watching that for this week. This could be a very beautiful setup for this week, so just keep that in mind. Taking a look at the 1-hour, so your 1-hour, you're staying above that 64,000-ish area. Earlier today, I called basically that bottom at 63.8. I said, watch this 63.8 to 64,000. Obviously, price kind of chopped around there and got that move up. So 63.8 kind of was around our bottom there. But I would be expecting for us guys, like I said, to get that move up to at least about 64.6. This is saying, I believe I was talking about 64.9-ish, if I remember correctly. If we take a look at the liquidity, yeah, I mean, there's a possibility that we do some bullish consolidation and keep that move going up, right? So I definitely could see that potentially happening, but just kind of, be wary of, if you are shorting, just be aware that based off of time, um, you could basically get wrecked. I'm going to tell you that right now. Just because of the fact that Monday did dump first. And that's what we usually want to see on a bullish week. So just be very cautious if you are shorting this market. Okay, never financial advice, but I'm just telling you, I still believe that the trend is up. So just be very cautious if you are going to short this. 15 minute, I would look for at least a move up to about 64,600, possibly getting rejected off of this resistance line, which would also probably align with around the 200 MA right there. So that would be kind of your first area, besides that 64.9, to potentially look to take profit there if you are going to do a long. Taking a look at your order book, obviously not the best sign. You do have a lot of orders still to the downside. This right here is basically a wall of orders that you could say. So essentially what happens with a wall of orders is it usually acts as a point of support. So I would say as long as these orders stay, this is going to be your support area where price is going to have a really hard time pushing through it unless these orders are sell orders. If they're sell orders, then it will just kind of basically allow price to continue expanding to the downside in a very fast fashion. But if they're buy orders, this could act as a nice area of support right here. So again, 63,650 to 63,700 for right now, going to be acting as your support as long as those thicker orders are there. And then to the upside, obviously, you don't really get a lot of liquidity or a lot of orders, I should say, until about 65.8. So it is kind of a dried out, low volume market for right now. We'll take a look at the simple map real quick and see kind of what that shows us, but it probably will kind of say the same type of thing here. Taking a real quick look at the simple map, let's see here. So you can see that we have, a 64,200 possible area of resistance. And then if you can get past that, you'd be looking about 64.4, and then you could basically roll through until about 65,000. So essentially, that kind of aligns with that bearish 786 if you're able to get past 64.4 and obviously 64.2 as well. So that's kind of some levels that you would be looking at to the upside. And then obviously to the downside, we do have more liquidity, more people that have gone long, closer bias here. But you'd have to get past 63.750 as a point of support. So that basically aligns with these levels right here, and then it would be 63,690 again within this range. And if you lose that though, guys, you can basically roll all the way through at least to probably about 63,240, which kind of takes us into this bottom order right here. Okay, so you have a couple of support points, but nothing that is major here. There's still that potential that we could kind of roll through this. It's kind of, I would have to say, guys, this is kind of up in the air. My overall directional bias is going to be up for right now just because of the 4 hour setting in for my model that I play on the 5 minute and 10-minute time frames. But it's obviously because price is fractal, it occurs on the larger time frames as well. So it is kind of alluding to me that there's a decent chance, as long as we hold that 786, that we're going to get that major move to the upside, at least around that 67.5 area would be where I would be targeting. Taking a look at your swing time frames, going to be kind of the same information. 63,750 going to be your first line of defense. Then 63,690, you lose that, you get all the way around to 63,200-ish area. Now moving on to the upside, you'd have to get past 64,200. You get past that, you look at 64.4, and you get past that, you can roll all the way to about 65,000. So there is a bigger possibility and a decent possibility that we kind of roll through this liquidity to the upside, because there isn't as much of a resistance as there is, support to the downside. So it is alluding to the fact that we could possibly take some of this out first prior to moving down. All right, guys, that being said, that is what I have for you for right now. Oh, one thing, let's take a real quick look at the Forex Factory, see what's happening this week, what to expect here, just so that we're prepared. Obviously, no red folders on Monday for the USD, nothing on Tuesday, so Tuesday could be a boring day. Wednesday, you got core CPI month over month, year over year, and regular CPI month over month, year over year, so that will definitely potentially drive the market. That could definitely drive it up. Thursday you also have PPI. So you got two days in a row this week. Wednesday and Thursday are going to be your most crucial days because of the Fed folders. So that could definitely bring some more volume into the market. So keep an eye out, guys. Wednesday you're looking at 5:30 a.m. Pacific Standard Time for those USD events. And then for Thursday, you're looking also at 5:30 a.m. For the PPI USD events. All right, guys, that being said, that is what I have for you for this evening. As usual, if you guys want to get 10% off of Trading Different, feel free to use my code Sean, tradingdifferent.com/code/Sean, and you can claim your 10% off discount of the Trading Different tool suite to be able to easily identify trend and bias, and basically be able to also see where all of the liquidity is at in the market. All right, guys, that is what I have for you for this evening. I hope you all have a wonderful night, and I will talk to you all in the morning. Take care.